Hi and welcome to Erik Penser Bank. My name is Jonas Thulin, I'm Head of Asset Management, and I will try this week to make an even shorter version than I had for the last few weeks. The entire presentation is on our social media platforms and on our homepage as a bank. This is the bank's house view, and we will concentrate this week on one phenomenon which I think will be quite telling for the markets going forward. We have positioned quite heavily according to this theme that I will mention in a couple of minutes. Here you can see our global equity portfolio. Our allocation portfolios are almost, after today they'll probably be up, but almost break even. We have managed to, ever since the horrible war broke out, to actually add value every single day in global equities, with and without the FX component. We're quite heavily tilted, as you can see on the right hand side, to US tech. And our quantitative hedging strategy and VIX overlay hasn't even begun to kick in yet. So we have more downside protection, but as we're already outperforming quite rapidly, we're going to stick with this portfolio. We have taken an aggressive view against the Swedish krona. 92% of the global equity portfolio is unhedged in dollars, and the rest in euro, and a small proportion in Swedish krona. From the global equity portfolio, we have about, depending on which type of portfolio you have, between 0 and 1% exposure to Sweden. So we are definitely out of home bias. We think that was the right call, and it's been proven to be a perfect call for this year. But when we look at this, it's quite obvious that we have a US tilt, and that's sort of the basis of our theorem. And when we quantify the word, we start to see two completely different narratives. And we have heaps of data on this, but I will try to focus on the risks that are spreading from the sanctions in Russia, which we think, of course, are almost mandatory and we greatly support. But the fact of the matter is that if you look at 25 delta risk reversals on euro-dollar, for example, we can see that the market is assigning bigger risk and downside risk on euro-dollar from this crisis than we've had since 2017, 2015, 16, classical euro-dollar crisis year, the Greek crisis in 2011, etc. This is actually now a bigger risk event than the pandemic outbreak back in February 2020. That is, for us, is a little bit of a clue of what's going on in the market. We can also see that the iTraxx index is moving on the upside, i.e. increased credit risk in Europe. For us, this means that there's a theme that we have, there could be the right or wrong call, but we have decided to implement it in our global portfolios, that Europe will head in one direction, the rest of the world, and US, Asia, Africa, emerging markets, Latin America will head in a different direction. And I think today was a pivotal day when we can see the Swedish benchmark is down 20% on a yearly basis. Dow Jones is up 1.6% in Swedish krona. That kind of spread is quite rare. And I think this graph is actually our main sort of single graph for this week, which is the R2, i.e. we try to calculate not only the correlation but also the magnitude of the moves. That means a move in the US explains about less than 10% of a move in Europe, in European equities. And I think that's sort of the pivotal of our thematic and our strategy and our allocation, that if we're right, the US macro earnings are better than European, which we believe and we derive in this presentation, you will have this type of break, i.e. you will start trading US equity markets in one direction, in one magnitude, and Europe, unfortunately, will not be able to follow. For us, this means that we are heavily tilted towards the US, Latin America, emerging markets, Middle East, Africa, Asia, and not a dime left in Europe. Sad but true in that perspective, but the reason is that we simply have a divergence now between US macro, US earnings revisions, US price target revisions, etc. versus, for example, Sweden or European. This is key for us. We have a lot more presentation material on our homepage. You can find also my social media, and we will update this every single day, and we'll be back in a week and try to see if we stand by this call. But for this week, we don't plan to do anything in our portfolios. Our global equity portfolios, both with and without the FX effect, is actually increasing value every single day after the invasion. So we are just sitting pat for the time being. Thank you so much for your time, and I'll be back in a week.